on the chip stocks overall, and for that we'll bring in Mizuho analyst Vijay Rakesh and Needham analyst Rajvindra Gill. Vijay, let me start with you because you wrote a piece, I think it was just last week, about the possibility of this expanded China restrictions coming. So, who wins, if there are any winners here, and who loses as a result of this?
Yeah, typically when you have this kind of a volatility, it's tough to find winners. But what we think is happening is obviously the memory guys, Micron, Western Digital, could be winners in the longer term, not in the short term. And if you look at the near-term headwinds, that would be obviously for the semi-cap equipment OEMs, the WFE guys, Lam, AMAT, etc. So that's where we see the biggest impact. But as you saw in the restrictions, they were also targeting some of the supercomputer and the AI GPU side. The supercomputer is obviously an escalation over the AI GPU side. And so we think some of the CPU suppliers, AMD, etc., probably also start to get impacted. So that's where we think you see near-term headwinds. But the memory OEMs, Micron, Western Digital, the longer benefit. Near term, obviously, the worry is consumer weakness, demand slowdown, oversupply.
Well, give me a sense. All right. Well, longer term, why do Micron and Western Dig benefit?
Yeah, I think it basically takes out a supplier in China, YMTC, Yangtze Memory, which is kind of in the crosshairs in terms of wafer fab equipment being supplied. So that takes out some supply from there, and also CXMT on the DRAM side. So that takes out a fifth player on the NAND side and an emerging player in DRAM, which consolidates supply, makes it much more manageable to the demand side. You would probably also think about the China suppliers being a little bit less disciplined, I would say. So I think this basically brings more supply-demand rational and balance in the market. So that'd be good for these guys. So yeah.
Raji, big picture, the semiconductor stocks, they peaked, late December of last year. We've been dealing with this idea that we've gone from kind of, super cycle on the upside to a glut. How far into it are we? When is the market going to be able to sniff out that the forward estimates are reasonable and that inventories are back into line?
Yeah, definitely. The industry, based on our analysis, is going to undergo, we think, a 4 to 6 quarter inventory correction. We think the inventory peaked probably in the second quarter of this year, and we think it's going to experience about a 4 to 6 quarter correction. The inventory at the customer levels, whether it's the smartphone customers, PCs, networking, they're at record levels in terms of how much inventory they built up over the last 2 years. And then if you look at the inventory at the chip companies, the internal inventory, they're 50% above the 5-year median average, the median. And the inventory has been accelerating on a year-over-year basis. So the internal inventory keeps on building at a faster rate than revenue growth. And the concern, that we've had for about 5 or 6 months, the Needham Semiconductor franchise has been cautious on the cycle for about 5 months, is that as more supply comes online, there is more, the supply constraints are starting to ease. It's going to happen right at the time when demand starts to decelerate. And as a result, supply-driven correction could last 4 to 6 quarters. Now, when you look at a potential, historical precedent, in 2018 and 2019, the semiconductor industry entered into a period of excess inventory. It lasted about 4 quarters.